Please welcome to the stage Chris Dodwell, Global Head of Policy and Advocacy and Co-Head of the Sustainability Centre at Impax Asset Management, Alex Edmans, Professor of Finance at London Business School, and Tina Mavraki, Chartered Portfolio Director and Strategic Advisor, for a conversation with Bloomberg's Erik Schatzker.
Good afternoon, everyone. Just so you're aware of who's who, this is Tina, quite obviously. That's Alex, and that's Chris. We're here to talk to you about something a little spicier, perhaps, the politicization of ESG. I'll begin by saying that ESG has definitely suffered from politicization back in the United States, where I live. It does, I suppose, depend a little bit on where you live, but thanks in part to media amplification, the whole country is feeling the pushback, and the net effect is either less support or less enthusiasm in the mainstream, in particular around two issues, energy transition and DEI initiatives. There are, I should add, some real consequences to this. Investors pulled a record $13 billion from US-based sustainability-focused investment funds in 2023. And now, people here in the United Kingdom and in Europe are asking some of the same questions and coming to some of the same conclusions. So, before we get into a panel discussion with my distinguished guests, let's run a poll, folks. Colleagues of mine, if you could please bring up the poll. Where will ESG be in 5 years? You know by now how to respond. By the way, I should say, we must be doing something right. When you show up at 2:30 in the afternoon, the room is still packed. Where will ESG be in 5 years? A, even more polarizing and politicized. B, no longer controversial. C, succeeded by a new sustainability framework. Or D, utterly discredited. So we'll give the audience time to respond to the poll, and then we can see how they feel about it. But in the meantime, let's dig into an important question. Panelists, and Alex, I think I'll begin with you on this one. Why is this happening? Is ESG, there could be a number of potential explanations. Is ESG conceptually flawed, overly broad, too ambitious? Is this payback for sanctimony, perhaps? Does it reflect maybe real societal, cultural, generational divisions over things like individual or collective rights? What's going on?
I'm actually not sure what's going on. So to me, it's confusing why this is so politicized, because to me, ESG is something which is entirely rational. So how did I get into this topic to begin with? So 21 years ago, when I started my PhD at MIT, I wanted to study what creates long-term value within companies. And I recognized that in the 21st century firm, it was not just tangible assets, such as plants and machinery and buildings, but intangible assets, corporate culture, relationship with customers, trust and stewardship of the environment. And so what I looked at was the link between these forms of intangible capital and long-term shareholder value. So to me, it's quite confusing that there are some, particularly on the right, who are concerned with ESG when this is a way of creating long-term value within companies. Now, it's true that there could be legitimate disagreement as to whether to invest more in human capital or social capital or environmental capital or just physical capital, but we should be able to have a reasonable grown-up discussion about that, just like there's discussions as to whether companies should expand geographically or be more domestically focused without one person being called a climate change denier and the other a hippie. So what I hope is to have more grown-up conversations. Yes, we can disagree, but what we're trying to do here is to create long-term value within companies and have that discussion.
Tina, Chris, I want you to help answer this question. Why is this happening? It may not make sense to you, but I still want an answer.
First of all, just a little parenthesis. Because you made the effort to be here, I'll try to liven it up even more. Yeah. I take issue with that question that you put there.
Oh.
Where will ESG be in 5 years? What is ESG that where it's going to be in 5 years makes such a big difference? If Alex is right that ESG is just people, process, human capital and any form of capital coming together in the value creation process, what is really the question that you're asking that is fueling or making emotional a topic that it's not meant to be?
Well, it's a good question. I mean, I would say in some camps, it is more than a framework. It is more than a system of values. In fact, if it is a system of values,
there's no value in this. Well, where did we talk about principles or values? We talked about core ingredients to the value creation process. So the very question that you're asking, and I'm not taking issue with that. I'm taking issue with the way that the whole ESG conversation is. I mean, the way we've been talking about ESG, the way that it's framed, it's as if we're starting to talk about religion here. It's not. And where is it going to be in 5 years? Well, we're going to take it wherever we are taking this conversation. So why don't we get back to basics, understand what it is that we're asking exactly, and then answer these questions.
Well, the question, so the question is,
why
has it, but we can take issue with the poll. The poll is meant to be provocative. I'm glad it provoked you. Why is this happening? Why has ESG become politicized?
So I think this level of intensity calls for some real curiosity around this. You're asking a very valid question in my point of view. And what I think is happening is that everyone is trying to solve their problems through ESG. I got badly paid, it's ESG. I got my subsidies taken away, it's ESG. I got a bad director, of course it's ESG. No, it isn't. ESG has always been around, we just gave it a name. And because we gave it a name, we got fashion out of it. Because we got fashion out of it, it's gone in a million different directions because it doesn't belong to anyone to sponsor it properly. So why is it that climate transition, I love the 2 points that you've identified in the US because they're very real. Think about it for a second. Climate transition in an arena of geopolitical mega fluidity, right? In an geographical area where you hit record insured and uninsured losses last year, according to the insurers and the reinsurers. So why this irrationality? And my sense is that we found a culprit. And now, throw your divorce into it, of course it's going to.
Chris, you're nodding your head over there.
Yeah, well, I think Tina's got a really good point about breaking this down. I mean, if you break down ESG into its 3 different elements, the governance piece, who is going to want to invest in a company that's got poor governance? So let's park that one. Then on the social and the climate or the environment brought large, you can see risks associated with both of those that investors are really concerned about for good rational reasons. But actually the policies that you want to put in place to address them can become politically divisive. And they can be quite difficult. So I spent 20 years working on climate policy before I joined Impax. I used to go to the UN Climate COP as the head of the UK delegation there. And you think this is tough. Try to convince developing countries in the early 2000s that they needed to take action on climate change. Now everyone's realised this is a whole world problem and we're moving forward with it together. But we're reaching the stage where even though the economics are getting better, actually, we're reaching a stage of implementation of this targetry where it needs real behavioural change across the whole of society. And that is quite a difficult thing to effect without some policies to support it. Even if you're talking about decarbonisation of the grid, in the UK and elsewhere, we're going to need planning reforms. And those have to be pushed through. They have to be handled really delicately with the communities that are going to be affected. There are going to be people whose jobs will be displaced and will turn into new jobs. Again, these need to be really well handled by, shall we say, a sensible, coherent, mature set of policymakers that are willing to build bridges rather than look for division. And I think what we've got at the moment is people that are trying to find divisive policies, and they've landed on this as a potential one. Also, let's just remember the geopolitical context. We were on a high point at the end of 2021, where it really looked, after the Glasgow COP, that things were coming into alignment. And then even with the pandemic, the Build Back Better programs and all of that, and then we went into a very difficult geopolitical era with the Ukraine war that pushed energy prices up and had everyone scrabbling around for solutions. So that's taken up a lot of policy-making bandwidth.
Alex.
I'd like just to endorse a point that Tina made earlier about the religious approach that some people have to ESG. So I've highlighted the benefits of ESG, but sometimes that can be taken too far and replaced clear-headed thinking. So sometimes people view ESG as a magic word that defies the laws of gravity or the laws of general business economics. So sometimes people think more ESG is always better. No, ESG, just like anything else, that can have diminishing returns. Sometimes people will put ESG on a pedestal above other drivers of company performance. If you're an investor and you vote against an ESG proposal, you might get cancelled in the media, whereas if you underperform the index 5 years in a row, you might not be shamed for the same thing. So what's interesting is that ESG is important, but it also should not be put on a pedestal compared to all other factors. When a new director gets appointed, maybe his or her credentials and experience might matter more than whether they're an ethnic minority or their gender, but sometimes the ESG factors will outweigh general sensible business factors, and that's where there might be politicization.
Can I add a tiny little thing? And we'll get to it in a bit, as you promised. But how about we think about the financial materiality of what it is we're trying to solve for in ESG? You mentioned transition. Mm-hmm. The other thing you mentioned is D&I. So I have a question for all the people here. I'm an investor, and I'm engaging with you as a company, and I come and review your DEI statistics, and I look at I for a change. And you are telling me that, you know what, Tina, you're investing $1, and because we're not including everyone, you're getting 50 cents back. Tell me who is going to take that? Who's going to take that proposition? No one. So financial materiality is all ESG is about, in my mind. It's not a higher moral ground. It's how things come together to produce a financial result for this quarter, next year, and in a pattern that is sustained financially. That's my take on ESG.
Before I move to the next question, I'll ask Meg here. Is it too early to see what our polling results look like? So let's see those polling results, folks. We asked the question, where will ESG be in 5 years? Okay. Succeeded by a new sustainability framework wins out. Even more polarizing and politicized comes second. Nobody is giving any credence to this notion that ESG will be utterly discredited, or almost no one. It might be 1 or 2 people in this room. We'll find you later. No longer controversial, almost not quite a dead heat with polarizing and politicized. So I think that's illuminating. The fact of the matter, though, is that for the time being, as we've established, there is a politicization. It's worse in some parts of the world than in others. What I'd like to know is, do you see evidence yet that it is changing or influencing decisions? Not ESG as a concept, the politicization of ESG is affecting the decision-making process at companies, in the C-suite, at the boardroom, for investment managers, in financial markets. Any thoughts?
Yeah, I mean, we make decisions every day based on what we think the future is going to look like for the companies we're investing in. Impax has a policy team that advises the investment managers and tries to read the rooms of what's going to be happening. So, we're looking at all sorts of scenarios about what happens with the US election. Not thinking IRA being totally thrown out is a likely scenario, but we're considering all of those. We're reading to the end of the speech. We were discussing this earlier on. The Rishi Sunak U-turn that everyone went on around last year actually had quite a bit in it about delaying dates for boilers, but at the back end of the speech was some really promising stuff around planning and permitting reform that will actually kind of increase the speed of rollout of renewables in the UK. So we're looking hard at these questions, and I think what we need to be doing is working out how we navigate a bumpy transition. It was, you look at the NGFS scenarios and kind of like the orderly transition has a nice straight line on a graph. Well, that was never going to happen. We were always going to hit bumps on the road. So I think we're moving more into a scenario where things are not going to go as smoothly as they might have done. But
does that affect what you do at Impax? And by that I mean, and I suspect I know the answer, but I'm going to ask the question anyway. do you read the room and soften your message, moderate your ambitions, or does the ESG pushback just make what Impax is doing that much more differentiating, and so you lean into it that much harder?
Yeah, I think we lean into it. It's our area of expertise. We have broad environmental strategies that aren't just focused on climate. They're focused on other aspects of the transition, looking at what's happening, the interest in nature, and how do you kind of limit the drivers of biodiversity loss. And with all of this, wanting to really work out what the impact of the risk is. So physical climate risk is not a political question. That's going to happen. We're stuck with this climate that is going to get increasingly difficult to live with for the next 10 years because of the inertia in the system. So some of this stuff is not affected by politics. So we're looking at other aspects to sort of add to that environmental portfolio. But I think we just sharpen our pencils and look harder at the detail.
I think the implications will be distortions of decisions and unintended consequences. So I recently ran a poll of a survey of over 500 portfolio managers on the impact of ESG, and some have financial consequences, so the inability to invest in stocks that could have outperformed and achieved portfolio diversification on behalf of your clients. Now you might say, well, I mentioned unintended consequences. Isn't that an intended consequence? Shouldn't ESG deprioritize financial returns at the expense of the environmental and social? So what was particularly striking about the survey was that ESG constraints actually hindered asset managers' pursuit of the ENS. Well, why? Well, number one is ESG often is reduced to quantitative dimensions, so asset managers have to prioritize the quantitative stuff which is in the metrics, not the qualitative stuff. So this might be demographic diversity at the expense of cognitive diversity or social diversity, and also diversity and not equity and inclusion. And also, the way in which ESG is sometimes measured is pretty black and white. So this might lead you to not investing in, say, a hard-to-abate industry, even if you could have invested in that company and made sure it's decarbonising, because industries are defined as either good or bad. So sometimes these constraints and the fear of being lionised in the newspaper for investing in this company in a difficult industry may actually hinder investors from making the real changes that are actually going to improve the ES performance.
Can I just come in very quickly on that? This idea of reducing freedom to invest seems just so counter to the whole message of the advocates of anti-ESG. Why would you want to restrict your options? If that was happening from the other side of the aisle and they were restricting options, then you'd have massive pushback from the red states.
I think there's something equally interesting to point out about what you said. You said ESG at the expense of financial returns. Now, that is what we're talking about here. Well, that doesn't answer your question, unfortunately, but let's complete the parenthesis here. Why do we have to separate the two? So there was this very interesting article that I read very recently, and I will give the source because Alex Edmans is going to come back and haunt me otherwise. So who was it? It was NBC that was talking about the last solar eclipse that they tried to kind of parameterize try to approximate the cost of it. If it cost the entire US working population 20 minutes to get off their desks to look at the solar eclipse, and that you have to correlate it with the salaries that these guys get paid. Back in 2017 alone, 20 minutes cost 694 million. I loved the maths. Let me ask you another question. The fact that you're not included in conversations. You have this miscommunication with your bosses, miscommunication between board all the way down to the third line of defense or to the trenches. If you multiply that by the number of 20 minutes that you're losing, what is the financial materiality of that? No one talks about that, but it's so real. Who do you think produces models? If we're run by models and AI, who produces models? It's people. So why all of a sudden people are not important in decision-making and in financial decision-making? That's the real issue that I'm taking with the advocates of ESG. It's not ESG and the rest. It's all about making money consistently in the long term. Now, let me answer that poor question that you asked a while back because we don't have much time. what you asked here encapsulates the way that you phrased the very question here. It really encapsulates the point that language matters tremendously.
It does.
Right? And in my experience, it makes a huge impact in board decisions, in ExCom discussions. They talk ESG matters and they say, oh, we have to do ESG now. Well, you just did it for 9/10 of the time, and now it's 1/10. Or you say, you know, what will our customers think of ESG? Well, this is ESG. You are talking to your customers. And the way you have to phrase it, so you don't piss some people off, or you dissect your customer base and you increase your differentiated service as a result of different preferences or needs, actually is ESG. So yes, you need to introduce new language. You need to start.
That's what you tell the
big time,
CEOs.
Big time.
That's what you advise the boards on which you sit.
Absolutely. I don't advise, I direct, right? So yeah, well, so if directors start advising, then you know, good luck to directorships. But
fair point.
Lost my train of thought for a second, but
no, I was asking you
bottom
about...
line is language matters tremendously. If you're talking geopolitics, you're talking ESG. Don't say it's ESG, talk geopolitics. If you're talking supply chains, you're doing ESG. Don't call it ESG, call it supply chains. If you want to do governance, you're talking risk management. God forbid we're having financial decisions without risk management. So let's refocus our language, let's get back to basics, and let's solve for the problem at hand. You're absolutely right. You know, people that are taking an issue with ESG are right in saying that it's not one dress that fits everyone after Christmas dinner, right? It is each to their own. So find out your financial materiality. What are the real issues that you're dealing with in the organization? Start measuring, for goodness sake. Alex Edmans, you have to agree with me on that one, right? measure to death as you can measure. You know, we're all left-brain people here.
But Tina, I'd say this is already happening. Even in,
even
in the US, where there's the pushback, if you actually, the conversations we have with the asset owners and the conversations we have with the companies suggest they're still managing these risks. They're still looking at these issues. It's just that there's this political kind of misdirection almost happening that is suggesting this is a bigger swing than it is in reality.
So it needs a new name.
So why do we even need a name to begin with? So why can't we call this long-term value? So we're here to create long-term value. That is not political. Now, some people say, well, that directs people to consider environmental and social factors. Why do we not have a PIC acronym for productivity, innovation, and culture? They also matter. We don't need an acronym because anybody, I agree with Tina, who's doing their job as a director, as an investor, will be considering productivity, innovation, and culture, and they should also be considering governance. It's a no-brainer, as you suggest, Chris. Also environmental and social factors. So I think this acronym has led to politicization, which we do not need to begin with.
It's a four-letter word. You have an answer for it, though. You're calling it something else.
So sustainable. Well,
this is a moment in ESG, in Bloomberg history. You heard it here first.
So my latest paper calls it rational sustainability. So why sustainability? That's about creating long-term sustainable value. And the whole idea of rational is that we use evidence and analysis. We understand diminishing returns. We're going to use the same rigor to address these sustainability factors as we would for any other business decision.
Can we neutralize, eliminate the politicization around this three-letter term, ESG? Which, as I say, has become a four-letter word by just, can we?
Yeah,
by calling it something else?
Just this week, Chris Stott, the outgoing chief executive of the Committee on Climate Change, has said he'd be quite happy to say goodbye to net zero because he thinks that even that has become a political
and call it something else.
And break it down to constituent factors. What we've got to do is reduce emissions. End of story. That's where we need to start. A label about where you got to the end was quite helpful in communicating the degree of change we needed to have to start with. But actually, we need to just get on with implementing, not setting long-term targets.
Very quickly before we end, we have 40 seconds. Just out of curiosity, is there anyone or anything you look at and say, that's why we have this problem?
People are getting very angry.
Yes.
You had this conversation.
But what made them angry? Is there something that stirred the pot?
It's the economy stupid. To me, it's the economy. You know, why in 2021, everyone was happy to talk about this. Why? Because it was a time in the world after COVID where everyone said, you know what, we're humans. Now you have anger escalating from the trenches all the way down to, you know, countries, right? So the angrier people get, the more you're looking for culprits. Who was it? Was it Lord Brown that said, when the tide turns, the majority hits on the minority? Well, I think we have another instance of that. So let's cool it down. Let's think sensibly. Let's start talking. Let's start listening and then start responding. Let's have genuine conversations. Let's start bridging. That's the only thing I can advise here. Call it board, call it ExCom, call it risk management committee, call it at home, call it anywhere.
As much as I'd love to keep the conversation going, I think that is a lovely place on which to end. Tina, Alex, Chris, thank you all very much.
Thank you.